Here's something that might surprise you. The most successful traders I know spend roughly 80% of their time doing absolutely nothing. While amateur traders are frantically clicking buy and sell buttons like they're playing some twisted video game, the professionals are sitting back, watching, and waiting for the perfect moment to strike. Today, I'm going to reveal why overtrading is literally the fastest way to destroy your profit potential. Not bad market analysis, not poor risk management, not even picking the wrong stocks. It's a compulsive need to always be in a trade that's killing your account. And by the end of this video, you'll understand exactly why doing less can actually make you more money than you've ever imagined. The uncomfortable truth about trading that nobody wants to hear is this: trading isn't supposed to be exciting. If your heart is pounding every time you enter a position, if you're constantly refreshing your portfolio, if you feel that rush of adrenaline with every price movement, congratulations, you're probably losing money faster than you can deposit it. Let me paint you a picture of what overtrading actually looks like. You wake up at market open, coffee in hand, eyes immediately glued to multiple screens. You've got 15 different charts open, 3 news feeds running, and your finger is already hovering over that buy button before you've even analyzed a single setup. Sound familiar? Here's what happens next. You spot a stock that's moved up 2% in the first hour. Your brain immediately starts creating a story. This could be the beginning of a massive breakout. Everyone's going to pile in. I need to get in now before I miss it. So you jump in without any real analysis, without checking support and resistance levels, without even having a clear exit strategy. But wait, there's more. While you're in that first position, you notice another stock starting to move, and another one. Suddenly you're juggling 5 different positions, none of which you properly researched, all of which you entered based on pure emotion and FOMO. This is the overtrading trap, and it's designed to separate you from your money as efficiently as possible. The market doesn't care about your need for action. It doesn't care that you're bored. It doesn't care that you haven't made a trade in 3 days and you're getting anxious. The market is going to do what the market is going to do. But here's where it gets really interesting. Let's talk about the psychology behind this destructive behavior. Your brain is hardwired for immediate gratification. We evolved in environments where quick decisions meant survival. See a threat, react instantly. See an opportunity, grab it immediately. This ancient programming served our ancestors well when they were hunting for food or avoiding predators. But in modern financial markets, this same wiring becomes our greatest enemy. Every price movement triggers that same fight or flight response. Every green candle screams opportunity. Every red candle demands immediate action. Your primitive brain is constantly telling you to do something, anything, because standing still feels like death. The trading platforms know this. They've designed their interfaces to exploit these psychological weaknesses. Flashing colors, real-time updates, one-click execution buttons. Everything is engineered to make you feel like you need to act right now. The more you trade, the more money they make in commissions and fees. Now let me share some numbers that will shock you. Research shows that 97% of traders who execute more than 300 trades per year lose money, not break even, not make modest profits. They lose money. Meanwhile, studies of successful traders reveal they average fewer than 50 trades per year. Think about that ratio for a moment. The most devastating part isn't just the direct losses from bad trades, it's the death by 1,000 cuts. Every trade costs you money in spreads, commissions, and slippage. When you're making dozens of trades per week, these costs compound exponentially. A trader making 200 trades per year might pay thousands of dollars in transaction costs alone, even before considering whether the trades were profitable. But the real killer is what happens to your decision-making ability. Your brain has limited cognitive resources. Every decision you make throughout the day depletes this mental energy. Psychologists call this decision fatigue. By your 10th trade of the day, your analytical skills are shot. You're running on pure emotion and impulse. I learned this lesson the hard way during my 2nd year of trading. I remember one particular week where I executed 31 trades. 31, I was so proud of how active I was, how engaged I felt with the market. I was a real trader, right? Wrong. By Friday afternoon, I had turned what should have been a profitable week into a disaster. The first few trades were actually decent setups based on my strategy, but as the week progressed, my standards got lower and lower. I started taking trades that sort of looked right. I jumped into positions based on tips from trading chat rooms. I chased breakouts that had already moved 10%. When I finally calculated my results, I was down 23% for the week. But here's the kicker. If I had only taken those first 3 trades, the ones that actually met my criteria, I would have been up 8%. My need to stay busy, to feel productive, to justify sitting at my computer all day cost me 31% in potential gains. That's when I realized the problem wasn't the market. The problem wasn't my analysis. The problem was me, my psychology, my inability to sit still and wait for genuine opportunities. The hardest thing I had to learn was that boredom is actually a competitive advantage in trading. While everyone else is frantically searching for the next opportunity, the patient trader is conserving mental capital for when it really matters. Think of it like a lion on the African savanna. That lion doesn't chase every gazelle that passes by. It sits, it waits, it observes, and then when the perfect moment presents itself, it strikes with deadly precision. Most traders operate like caffeinated squirrels, jumping from one shiny object to the next. They see movement and immediately assume it means opportunity, but movement without context is just noise, and noise is expensive. Let me break down the mathematics of overtrading destruction. Suppose you start with a $10,000 account. If you risk 2% per trade and take 200 trades per year with a 55% win rate, you might think you're being conservative. But here's what actually happens. Your transaction costs alone will eat up roughly $400 to $600 annually. Add in the psychological deterioration of making that many decisions, and your actual performance drops significantly below what the numbers suggest. Now compare that to a trader who takes 30 carefully selected trades per year, risks the same 2% per trade, but achieves a 65% win rate because they're only taking high conviction setups. Not only do they pay a fraction of the transaction costs, but their mental clarity remains sharp throughout the entire year. Their decision making doesn't degrade because they're not exhausting their cognitive resources on marginal opportunities. The overtrading epidemic has gotten worse with the rise of social media and commission-free trading platforms. Now you've got thousands of people posting their trades in real time, creating this false sense of urgency. You see someone bragging about their quick scalp trade, and suddenly you feel like you're missing out if you're not actively trading. Here's what these social media traders don't show you. They don't post their losses. They don't talk about the dozens of small losing trades that wiped out their one big winner. They definitely don't mention the sleepless nights or the stress-induced health problems that come from constantly being plugged into the market. The most insidious part of overtrading is how it destroys your ability to recognize genuine opportunities. When you're constantly in and out of positions, you lose sight of the bigger picture. You start focusing on minor price fluctuations instead of significant market structure changes. You become a day trader when you should be a swing trader, or a scalper when you should be taking position trades. Your time frame gets compressed. Instead of looking at daily and weekly charts for meaningful trends, you're staring at 5-minute candles looking for quick profits. This shift in perspective is like trying to navigate across the country using a magnifying glass instead of a roadmap. You might see every tiny detail, but you have no idea where you're actually going. I've watched countless traders destroy promising careers because they couldn't resist the urge to trade. They had solid analytical skills, they understood risk management, they even had winning strategies, but they couldn't control their impulses. They treated trading like entertainment instead of business. The entertainment factor is crucial to understand. Many people get into trading because it provides excitement that's missing from other areas of their lives. The market becomes their casino, their video game, their daily dose of adrenaline. But profitable trading is actually boring. It involves long periods of waiting punctuated by brief moments of action. When you overtrade, you're essentially paying the market for entertainment. Every unnecessary trade is like dropping coins into a slot machine. Sure, you might get lucky occasionally, but over time, the house always wins. And in trading, the house is a combination of transaction costs, emotional decision making, and simple probability. The solution isn't complicated, but it's not easy either. You need to develop what I call strategic patience. This means having predetermined criteria for what constitutes a trade-worthy setup and the discipline to wait until those criteria are met. No exceptions. No maybes. No sort of signals. Most traders fail because they never clearly define what they're looking for. They have vague ideas about support and resistance, or they follow indicators without understanding what they actually measure. Without clear criteria, every price movement looks like an opportunity. With clear criteria, you realize that most price movements are just noise. The psychological shift required is profound. You have to retrain your brain to find satisfaction in waiting rather than acting. You have to learn to celebrate the trades you don't take just as much as the ones you do. You have to accept that missing a move is infinitely better than forcing a bad trade. So here's the bottom line. Overtrading isn't just a bad habit. It's financial suicide disguised as productivity. Every unnecessary trade you make is a withdrawal from your future wealth. Every impulsive click of that buy button is you literally paying the market for the privilege of losing money. The path to consistent profitability isn't found in more action. It's found in better action. It's found in the discipline to sit on your hands when everyone else is frantically trading. It's found in the wisdom to understand that boredom is not your enemy. Boredom is your competitive advantage. Remember this. The market will always be there tomorrow. There will always be another opportunity. There will always be another setup. But your capital is finite. Your mental energy is limited. Your emotional resilience has boundaries. Protect these resources like your trading life depends on it, because it does. Stop trying to catch every move. Stop trying to be right about every market fluctuation. Stop treating your trading account like a video game. Start thinking like a business owner. Start acting like a professional. Start embracing the boring reality that profitable trading is mostly about doing absolutely nothing until the perfect moment arrives. Your future self will thank you for every trade you don't take today. Trust me on this one. The hardest part about making money in trading isn't finding opportunities. It's having the discipline to wait for the right ones.